The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Thursday's session featured a mixed bag, some pressure in corn and wheat trades. Soybeans did try to get their way back to a few green numbers, but largely it was a quiet, maybe even a disappointing day in the grains. Livestock trade was mixed to lower in cattle, fairly quiet in the outside markets as well. Let's take a look at what's happening in this trade. Joining us now for market analysis, Brian Doherty with Total Farm Marketing. Brian, good to talk with you again. Hope you're having a great week. And, we had some surprises on Tuesday's December WASDE report that I thought would give us a little bit of upward momentum, particularly in corn. But here we are, kind of a disappointing finish Thursday, and just have to wonder if we're having some farmer selling happening, Brian.
Well, let me start with this. Just yes to farmer selling. So at least in our communication with farmers, we've heard a lot of it. So and it isn't necessarily farmers selling everything. It's just that we've gotten the market, not we. The market got to the same price level it did in October, and then it took a 30-cent drop. Right? Didn't feel very good. So I think farmers said not this time around. So they had orders up there. Technically, it hit a 200-day moving average. It hit the upper Bollinger Band. Some of these technical signals that were maybe getting a little bit overpriced. Admittedly, when I saw the WASDE report, I sort of gulped and I said, "Boy, that's 10 to 20 higher in corn and a non-big supply year, right?" So the problem in a big supply year, it's just hard to get the market and the trade to get on board. But interesting, we've got an inverted market. That means the old crop is worth more than the new crop. That we haven't even grown yet. We don't know what acres are going to be for next year.
Mm-hmm.
And we have an inverted market on a record crop. So the either farmer selling has been light, demand has been good, or a combination to kind of put that premium into that level. Generally, it's probably because farmers have been pretty light sellers. And I think today was a day, or yesterday, where they became heavier sellers. The other event today, everything's relative, right? So export sales at 37 million. I look at it and go, that's a solid number. If we could get that every week, we'd be in great shape. But it's according to this morning's report, it's down 45% from last week and 32% from the 4-week moving average. So when you compare it to that, it's like, ooh, exports are slowing on this price rally. Nonetheless, exports are running 29% ahead of a year ago, and the USDA did increase the number on Tuesday, so they expect that to remain somewhat robust. They may adjust it later. The problem with the price rally right now, I know I'm rambling a little bit though, is that as the market goes up now, it creates more of an incentive for the Southern Hemisphere farmer to plant more safrinha corn, the second crop corn. So unfortunately, it's kind of self-regulating how high we might go in the market until there's probably something disruptive like a weather event.
Well, and let's dissect this a little bit more too. I know in the case of corn, March corn, we've been 450 is just that level we couldn't get through on the board. I've had some farmers commenting though on our YouTube and social media talking about, well, I have cash at 398 or 4 or whatever the case is. So I mean, what about the cash aspect of this market, particularly corn right now? I mean, do farmers? Is this a point in time, Brian, where farmers need to sell before the end of the year? Is it give up sales? I mean, psychology is a lot here too. I mean, talk about just interweaving futures, cash, and this whole conversation right now.
So if you asked any farmer, do you really want to sell corn today or yesterday? The answer is, I really don't want to sell corn today or yesterday.
Yeah.
If you ask farmers, should you be selling corn? I think it's a reluctant, yeah, I should. I need to move some. I need to generate some cash flow. I know there's historically still a large carryout, although shrinking. But when they kind of look over the fence and what's going on in the Southern Hemisphere, there's just nothing you can sink your teeth in today. And the way the market is in bear markets, and we've been really in a bear market for 2.5 years, rallies get slapped down kind of quick sometimes. And the fund money is really poured in. Keep in mind, the funds were net short about 350,000 contracts at their peak in summer. And now they're thought to be long about 135,000. That's a huge swing. The market's about 50 cents off its low. That's all that swing can do. So that tells me that the pipeline is getting fuller with farmer corn because farmers, didn't have as much corn sold this year as they typically do. and there isn't a really, robust carry in the market. So I think it's a lot of spot selling, not necessarily forward contracting.
Soybeans, thinking about the southern hemisphere as well. I mean, we're getting ready to harvest a big crop that seems to be getting bigger by the day from all the private estimates I see, Brian. I
Yeah.
mean, and we didn't get any changes really to the soybean balance sheets on the December WASDE. So you look at the soy complex and the picture there. Any thoughts for you post December WASDE, what we're looking at right now?
I think, and maybe rightly so, I think the USDA kicked the can down the road. It's just too early to assign any changes to the southern hemisphere crop. The private estimates they're going to be ahead of the game a little bit because they're boots in the ground. They're looking at things. I think the USDA is generally, I like that they kind of take a more proactive approach, but they came out with a pretty big number to begin with, 169 million metric tons. Conab and some of these others, that estimate, they started at 162, 164. Now they're edging their numbers up, right? And then some private estimates are over 170 million metric tons. You can throw those numbers in and out all day long. The truth is that Brazil had a tough start because it was so dry, but they made such fast progress that they caught up that I don't think you can pencil in any yield loss. And it's easy to pencil a little bit higher yield. But now the weather market truly begins mid. I'm going to say mid December. Now you might see some pictures here and there where they're starting to harvest beans in area. That's those are outliers. That's 1 or 2%. The bulk of the crop will be harvested into the January through mid to late March window, and so weather is just dominant right now in the forecast. So things can change, and I know there's a lot of consternation about, well, are we going to have tariffs? In 2018, that took beans down. It did. It took beans down, and within 2 years, beans were at $16. They went from 8 something to 16 something, right? Or challenge
Mhm.
16. So these things that happen in the marketplace come and go. The key is, does demand respond to lower prices, which it will in the bean complex? Secondly, when weather's disruptive, things can move kind of quickly. So what I'm telling farmers is, don't lose faith now. It's not all doom and gloom, but you should probably be prepared for a more defensive posture in this marketplace. And I would probably do that through the use of put options if I have inventory in the bin, or you could use put options against what you might grow next year. But maybe you don't have to go all the way out to November and buy a put there. You can buy something in a more closer by month.
Brian, how about the wheat markets? It felt like maybe lower in sympathy with corn to some degree on Thursday, but anything you're watching closely across Chicago, KC, or Minneapolis wheat?
There are some days where just you just have to kind of wave the white flag and say, what was new in the news today. I mean,
Mhm.
there just wasn't much there, right? And so typically you kind of need something in the news to feed the bull, as they say, right? So you got a nice double bottom, nice technical picture, broke downward channel line support, looking pretty good. I think it was a follower of corn down today. Export sales were, I'm gonna say it's kind of okay, 10.7 million, not stellar. Um, but when you have a day where you just don't have a lot of news, I'm a little disappointed. I thought the market might, and it's been forecasted, but it's cold out right now.
Mhm.
I mean, it's cold. It was 2 degrees below at my house in Wisconsin, wind chill minus 34. We have no snow cover. Everything's exposed. Wheat's a hardy plant. It has 9 lives, so the market seems to kind of dismiss that. But still, it's not ideal. And if things aren't ideal, you usually don't sell that. So I think it was just a sympathy run today to the downside.
I know outside market wise, we still got a robust dollar. We've had some new inflationary data out this week. The CPI, the PPI, the producer price index was out Thursday. Some folks I've seen talking that that was maybe a little hotter than anticipated. And we got a Fed meeting next week. I mean, this broader economic environment, anything big there that's weighing on the ags right now, to your thoughts, Brian?
Well, I think this concept of big, or I should say, smaller, but continually lowering interest rates, I think that's got to get a second look. The economy seems to be pretty well. And to your point, this inflation is sticky, and things don't magically change from one administration to the other. So what I mean by that, it takes time. So generally, an administration's economic policies are going to be felt for another 6 months to a year, no matter what Trump does, or his administration does. So you're kind of looking at this. I think there's a kind of a new look, thinking. Remember. almost a year ago at this time or into January, we were going to get some big cuts in the year, and there were going to be three, and there were going to be, half a basis point each, and get this interest rate down to about 3.5. That's not out there right now.
Hmm.
And so the sticky inflation's there. Um, that just that kind of resonates, and it does give us a different view because it's expensive to loan money right now, and that's going to be a challenge for farmers. It's going to be a challenge for industry.
We're talking with Brian Doherty, Senior Market Advisor at Total Farm Marketing here today. Let's go over to the protein sector. Cattle, a little bit weaker on Thursday. We've had a pretty solid week, though, across the cattle complex.
Yeah.
Started to get some more cash activity flowing in here Thursday. What's your take on this cattle trade here towards the end of the week?
Just a really robust week in cash and a really robust week in the futures, but higher products today, higher cash today, trying to bring cattle in, maybe some year-end shopping. I don't know, but the futures didn't really want to buy into it today. It did this morning, and then it reversed and finished with some losses, right? So not necessarily the best signal at the top of a market. The key is what the follow through does. So surprisingly good demand. We were just talking about interest rates, maybe the economy. So it seems to be kind of rolling along, but can it sustain? And it's just the same thing. I sound like a broken record. Can we see new demand channels? Can we expect the consumer to chase 190 cattle prices?
Hmm.
In the last year and a half, they haven't when we get to these levels. So today may have been a signal that a near-term top could be starting to form or in place. I don't want to go quite that far yet, but um, I'm finding it hard if somebody called me and said, "Hey, should I buy cattle today?" You're buying at the top, and I'd be very leery to argue that. I'd probably say the opposite. We probably should be selling cattle.
Hogs, I've been worried that we're running out of steam here, and with this long fund position, maybe we'd start to see some liquidation. But yet, here we come in on Thursday and kind of chop around in hog futures. What's your thoughts over there, Brian?
Well, we did chop around, but you have seen a decent correction. So I'm just going to look at my June chart here. 103.15 on December 3rd. This morning's low 99.02, so $4, so down about 4%. That's a pretty good correction. It did drop down to the 40-day moving average, which the last time we had some form of correction was in mid-November, same thing. So seems like the market is comfortable buying this moving average. I think that's just a reflection of where the value to the consumer has been, and the funds know that beef is a high price product. So it's almost becoming, and I hate to talk this way, but beef is almost a niche market. Maybe it's going to stay high because people can buy beef are going to buy beef, and they got
Hmm.
wealth and they got money. These are the same people that can, you know, buy a new car and not think twice about it. Um, but on hogs, that's been a good value proposition for the consumer. Chicken, poultry, all of those have been so. So the funds, I think, noticed that, and they drove that market up pretty hard here. But there again, we're getting to levels that you get much above $100, like we saw in June. That with $4 cash corn, that or 4.10 or 20 or whatever the hog producer can buy that corn at, those margins should be working and working well. That usually means expansion.
How about a dairy market update? I see some green there as I'm just looking at quotes right now. What's your take on the dairy trade this week,
A
Brian?
lot of green today. So cheese prices are acting like they finally, kind of getting it in gear, and they should. We've talked about this a number of times. We talked about this in for months. That man, cheese is a good value, and then all of a sudden it snapped like a rubber band and went up. And then at the same time, we were getting the bird flu concerns, and milk went into the mid 22, 23 area, 20, whatever it peaked out there, and we're kind of creeping back up toward that really fast on futures, with both the January and February contracts crossing over in March, crossing over the $20 mark today. Looked pretty bleak a couple of days ago. However, we do need to see cash cheese do better than it's at. We're set 173 on blocks, 178 on or 178 in blocks, 173 in the barrels. That doesn't equate to $20 milk. Whey is hitting 2-year high prices, Jesse. Good story there. So that takes up some of that void, but we're going to have to see something happening. Butter is languishing down near contract lows. It just isn't moving at all. And butter is trading around what do we got? About 252. And gosh, in September it was 315. That is a major drop off, and it has not recovered yet. So if butter can start to recover, then we've got a firm footing in a market that should probably be in the 18.5 to $22 mark. To get much above that, you have to have something pretty special to come along. And I think with the dollar where it is, it's going to be hard to imagine that.
Brian, always appreciate it. Final thoughts? Anything you want to mention or reiterate for folks today?
I think, we've talked about this all year, that you got to be prepared to continue to look for a balanced approach, sell into rallies. One thing I am going to caution people about is to kind of just be a little careful on 24. There's ample supply of grains, but there's not so much grain that the market couldn't change in a hurry. So I'd be patient there, but I do want to talk about setting some price targets in old crop, setting some in new crop, and letting it triggered. If somebody had an order to sell some corn yesterday, if the market hit 450 March, they're feeling a little better today because it's off today and they sold some corn. So they did the right thing the last couple of days, but they sold a rally. And so just, you know, I wouldn't have too much to spare out of the new crop. There's a lot of weather, a lot of time there. One scenario is everything goes perfect and demand falters. Well, then we're in a bear scenario. But I think we're going to have some opportunities. But think about December corn, getting some price orders into that 475, 485 area. Doesn't have to be on a lot, but it creates action and activity, and it creates your brain to engage once those are triggered, whether you do more or you hold back. But at least you get something sold on a rally, and there's a victory in selling rallies.
Brian, if folks want to reach out to you and have a conversation there at Total Farm Marketing, I know a few ways to get a hold of you. How can they reach you?
Yeah, we just love the conversations and questions. So feel free to call first at 800-334-9779. So that's preferred, but otherwise, I answer all my emails. Brian with a Y, so BRYAN, at totalfarmmarketing.com. So happy to respond that way. Or, check out our website and just peruse through, and a lot of resources there at totalfarmmarketing.com.
Brian Doherty, always good to hear from you. Thanks for joining us. Have a great weekend, and we'll talk to you next week.
Jesse, my pleasure, and a very early Merry Christmas to everybody. I know we'll be there next week, but keep it safe and slow down a little bit, and things will get done.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.